Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of Cenex Digital Link, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, and also get the right education to enable them to trade the financial markets profitably. So today, I will be sharing with you the market fundamental and technical breakdown for the time period of 10th of February to the 14th of February. 10th of February to the 14th of February. And how this goes is that I'll be able to talk about the technical chart first. After I talk about the technical chart, I'll then talk about the fundamental chart as well. We'll be diving deeper on how you can be able to use this information to trade the financial markets. Okay. So if this is your first time, thank you so much. Don't forget to smash the like button, comment Forex below, and share this content with your friends and family on your social media handles. As well, if this is not your first time, I really appreciate you coming back to get more education that will give you responsibility and control in becoming a profitable trader. So watch to the end. So today, we're looking at currently DXY, which is the strength of dollar, and we'll be looking at fuel XAUSD, also known as gold, then Bitcoin. So right now is DXY, and if I am to zoom out, from a change of character. Before it had a bullish structure, which was correction, lower high, directive structure, which is the correct structure, then okay. So we're expecting what bearish momentum to come in for dollar to become weak. But where we want to sell, which has already been marked out. So I see DXY having one more push to the upside and then dropping to the downside drastically. And once this low is taken, it is going to be a break of a neckline, a head and shoulder neckline, because we have a head and shoulder pattern that has already formed here on the higher time frame. And the strategy of trading head and shoulder is once the neckline is broken, the Pandora box for multitude of cells has been opened. Okay, so this is the left shoulder, this is the head, and this is the right shoulder. So once the right shoulder's neckline is broken, the Pandora box for massive cells that we can see massive cells towards the daily demand zone will be opened. So with that note, this is what I see for DXY. A little push up, then a push down. So let's go to the next pair on the list, which is Euro USD. Euro USD, as I can see, is currently inside a demand zone. And this demand zone was spotted as at last week. And it has also fulfilled efficiency by coming back to the return to origin. So what I see right now for Euro USD is more up push momentum to the upside. Probability is that it could still drop down a bit to grab some liquidity for those who didn't enter on London session to continue the push to the upside. Because if dollar turns to gain strength, if dollar turns to gain strength, this is something we can see. We can see that this demand zone, and we now be expecting the market to come back towards this demand zone. Okay. So if that should happen, more push down towards this demand zone and then continue to push to the upside. So that's what I see for Euro USD. Euro is 80% correlated with the dollar. So if it is quite confusing to us, we can just go to DXY and see what DXY is doing. While for AUDUSD, it's quite easy and the trade is quite clear. Currently, AUD is back inside the supply zone. We can be seeing a little sell pressure coming from the supply zone to the downside to head towards the demand zone. So once we get into towards this demand zone, we're now looking for our buy momentum for AUD USD. I'll still have to analyze this and share this particular trade setup with the VIP students. So if you want to join our VIP students, don't hesitate anymore. Just go to the link tree below on the description. Okay, once you go to the link tree below on the description, you're going to see this particular link tree /TonyFX. Over here, you can gain access to our seller store. On this seller store, you can now see the link to join our VIP students group. You can also see a link to schedule a meeting with me if anything is confusing to you about our programs, about our services. You can just come over here and click on this particular schedule a Zoom meeting, and you'll be able to reach out to me, and we'll be able to discuss every single issue that is confusing to you. We have other links here, like the recommended Forex brokers we have here is HFM, XNES. The recommended crypto broker is Binance, KuCoin. These are some of the trading tools. There are a lot. Over here are some of our groups already, the links to our groups. Like here is a Telegram group on Forex. These are our Telegram group for crypto. These are our WhatsApp group for Forex and crypto. These are our TikTok page. These are our Facebook page. These are our Instagram page. Every single page here is live and active. These are our Twitter page and these are our LinkedIn. If you want to just follow us for more updates, more information about what we are doing, where we're heading to, go and follow us over there. And if you want to be to be trading capital. If you need capital as a forex trader, you can also go and apply for funding from 10 Trade, okay? And you'll be able to be funded. They are like a broker. A broker is like a bank whereby you register with your NIN, verify your identity, and then you'll be able to what? Fund this account and then trade the financial market. This broker here loans you money to trade the financial market, but you need to register and verify it first, then before you can be able to start getting the loans from them. So with that said, let's continue with our analysis. So over here now, next is XAUUSD. XAUSD is on a drastic pullback. We see, we take it for a buy, because over here I've seen what a massive change of character, the break of this high over here. So any little pullback we see, we take it to the high. Why this massive upturn momentum is holding is because of the uncertainty in the market, because of all the tariffs going on between Trump, the United States of America, and China, Mexico, and Japan. Last week, Trump made a statement on Friday that they are going to impose tariff on Japan. And if that happens, it's going to make the dollar strong against the Japanese yen, massively strong against the Japanese yen. And we can be seeing a massive push about 100 to 200 or even 500 pips within USD and Japanese yen if that tariff play out, because Japanese was never included, but just last week Friday there was a statement made, and then Japanese yen has been included in those particular countries that will be imposed tariffs. Okay, so this is why investors are rushing to safe assets like Swiss franc, the United States dollar, gold, most importantly gold, and then Japanese yen. So all these are safe assets. The other assets, other pairs are risky assets. So that's why gold has been buying drastically. So we expect what? One more push down on gold, and then we look for our buy setups. Only buy setups right now for gold. Then the last on our list is BTC USDT. So we had a buy limit order over here for BTC, and it has fulfilled our entry. From last week, we did this analysis, and it has come back to fulfill our entry. We're expecting what? More push in the upside. Let me give you a detailed breakdown of the analysis of BTC USDT. So over here on BTC USDT, we had a corrective structure like this that played out like this. This was the corrective structure. This was what? The flag pattern. Its form was a break. This was a retest, because the market is meant to move up. But this time it's having a deeper corrective structure, which is like an ABC corrective structure. For me, and now we can now start moving up for Bitcoin towards our major target of $120,000 per Bitcoin. Okay, so this is what I see currently for BTC USDT. Okay, so every other thing Bitcoin is doing is just more of a corrective structure and accumulating orders over here. Everything is accumulation of orders for Bitcoin. So $120,000. If you miss this entry, on Bitcoin, don't worry, we're going to get another entry, and then we'll be calling the signal for you guys. This entry happened in the morning around happened yesterday evening around 9 or so. Yes. So if you missed it, don't worry, we'll have to get in on the buy. Okay. So that's what I see currently for Bitcoin. So if you want to learn how to trade, you can dive down to our website, www.10xdigitallink.com. Okay. Over here, you can see some of the testimonies of our students like Ogen Naye. I still remember what you told me that time. Everything, I'm still sticking to all of them. Okay. Over here are some of our few testimonies from our students. Over here is our website, our official website, where we say 10x Digital Link Academy brings you a unique perspective to the world of digital assets. We teach you how digital trading works, how to earn massive passive income on different digital assets, how to invest in safe assets, how to build and grow your startup business from zero to hero. And you need to sign up with us right now, because procrastination is a thief of your time. You need to be able to gain access to our platform. These are our team members from all over the world. These are our packages from the 1 month to 3 months to 6 months and 1 year. Okay. And from the 6 months package, once you're done learning from us forex trading, we'll be giving you funded capital of $1,000 to start your trading journey. Okay. So you should come and grab this opportunity. You should definitely come and grab this opportunity, because it's an opportunity that is going to help you become financially free trading the financial market while diversifying in different assets. Okay. Over here is Anisom Tochukwu. Good morning, Tony. It's good to hear from you. I have long awaited this opportunity. I am convinced I will do great things with you. You will equally benefit from meeting me. I assure you, I'll be a good student. And he was a good student. He dedicated his time, his effort, and practiced every single knowledge. Nneka, knowing and having you as a mentor is the best thing that has happened to me. You can come over here as well and see videos. These are video testimonies of our students who traded with us and made double of their money. This video, just come over here and click it on our website. You can see the official website there. So with that said, that's it for our our tutorial guidance. So for the fundamental aspect of the market for this week, we're starting with February 11th, Tuesday. Okay, no news today, Monday. Okay, so it's starting with the Westpac consumer confidence. Okay, the Westpac consumer confidence has to do with the confidence of consumers in the Australian region. Okay, over here we have a previous figure of minus 0.7%. Okay, for February. And over here, we have a confidence index of 92.1%. So we'll be more focused on this confidence change. If there is an increase, like if you see 1% actual by 12:30 a.m. on Tuesday morning, then we're going to know that definitely Australian dollar should be strong. And we'll buy Australian dollar against a lot of assets. Okay. So that's what I see currently for the Tuesday news for the consumer confidence. But if you see a figure lower than minus 0.7, if you see minus 0.8 or minus 0.9, it is bad. It's going to make Australian dollar weak, massively weak. Okay. So the same thing with the confidence index. If you see an increase to 93, 94, Australian dollar should be strong. But if we see a decrease to 90, Australian dollar should be weak. Then early in the morning by 1 a.m. as well, we have retail sales monitor year over year for the Great Britain pound. Okay. Over here is the previous figure of 31.1%, and the consensus is 1.2. Retail sales has to do with the total sales of products and services for a store, okay, in the London region. Okay, so they are calculating all the retail stores and the sales they were able to make. But this is just more like analyzing few stores, not really all the stores. They'll do like what's it called again? Or the survey, exactly. They'll do a survey, and then the majority of well-known brands and stores will have to conclude the survey to give them a figure. So a figure higher than 1.2% should give Great Britain pound strength by 1 a.m. Okay, but if it is lesser, it's going to make Great Britain pound weak. For us in West Africa, which is where we are currently, we'll be sleeping by this time. But this is going to be a very good indicator for us early in the morning by 8 a.m. to trade London session. If this news turns out positive for Great Britain pound, we'll be buying Great Britain pound against some varieties of assets. But if it turns out to be weak for Great Britain pound, we'll be selling Great Britain pound against some varieties of assets. So we'll watch out for this early in the morning by 7 a.m. West African time on Tuesday. So over here is business confidence for New Zealand. You know what that means already. How does the businesses in Australia feel? Are they optimistic about the economy developing, or are they pessimistic that the economy is declining? Okay, so if we see a figure higher than minus 2%, it is good. If you see like 1, if you see like 2, it is good. But if you see something like minus 3, minus 4, minus 5, it is bad for Australian dollar. And this news will drop by 1:30 a.m. Every news on Tuesday will be dropped early in the morning before we wake up. So we'll be using this news event to be trading what? Early London session for the Forex market. Then on Wednesday, we have New York session news. We don't have London session news. This is inflation rate month over month. Inflation figure, once it is higher than expected, it is good for the currency. But if it is lower than expected, it is bad for the currency. There is a very wise quote that says, inflation makes the rich richer, while inflation makes the poor poorer. And this is the most important thing you need to know when it comes to any currency. If the inflation is going to increase, the big companies who are the strong foundations of every economy would be making more money, and that would boost the currency. Do you get it? So that is how it actually works. Real estate market, stock market, commodity market, any market you could think of. Okay. So over here we see a figure of 0.4% before. They're saying that it will reduce to 0.2%. If this happens, dollar should be weak on Wednesday. But we see a figure higher than 0.2%, dollar should be strong. Exactly by 2:30 a.m., that's when this news will be dropped. Okay, so the one you can really watch out for is this inflation rate month over month for January, our CPI SA. Okay, but this is a derivative. Core inflation rate over here is a derivative. Okay, so everything here we'll be looking out for it on Tuesday by 2:30. It's going to be dropping. Sorry, Wednesday by 2:30 it's going to be dropping. We want a figure higher than everything here. If you see a figure higher than everything here, it is good. But if you see a figure lower than everything here, it is bad for the Australian dollar. Then, sorry, the United States dollar. Then in the evening by 4 p.m., we have Fed Chair Powell testimony. He's going to be speaking about the inflation figure, okay, and what they anticipate will happen in the next interest rate event. So they use interest rates to control inflation rates. If inflation is going up, interest rates will be hiked. If inflation is coming down, interest rates will be kept steady or cut. And in the last meeting, interest rate was cut for the United States dollar. Okay, so they are trying to put inflation under control. So that's what I see for dollar. Then on Thursday, we have the GDP. GDP year over year, great for Great Britain pound. Okay, this London session news, which has to do with the gross domestic product. Okay, it has to do with the growth. It has to do with growth. Okay, and economy's growth. That's simple. So that they are comparing last year December 2023 against last year 2024 December. So they are comparing it, and this is 1% for 2023. And yeah, they're saying that the 2024 the growth increased by 1.1%, which is 0.1%. That 0.1% means trillions of pounds. Okay, so don't just see it as a little figure. It means a lot for an economy. And if we see a figure that is dropped by 8 a.m. by Thursday to be like 1.2 or exactly 1.1, Great Britain pound should be strong. Okay, mostly this can be 1.1. Great Britain pound should be strong 8 a.m. Thursday morning. Okay, then over here is the GDP growth rate quarter over quarter from one quarter to the next quarter. Okay, over here is 0 against 0. If you see anything higher than 0 is good, anything lower than 0 is bad. Okay, so that has to do with everything with GDP, even the growth rate year over year, month over month, everything. We just need a figure higher than the consensus. If you see a figure lower than consensus, it is bad. Then the good trade balance non-EU. This has to do with total imports minus total exports. Okay, non-EU means that non-European Union countries, non-European Union countries. Okay, so it has to do with the trades they did with non-European Union, outside Spain, outside Germany, all these European Union countries. Let's say they did trades with China, they did trades with Japan. These are the good trade balance accurate figure for it. Okay, so are they in surplus or are they in deficit? Okay, so if they are in surplus, it is good for the currency. If they are in deficit, it is bad for the currency. So the previous is minus 7.72 billion pounds. Okay, over here they're saying that it has increased to minus 7.6 billion pounds, which is good. Okay, which is good. Minus 7.6 billion is higher than minus 7.72 billion pounds. So if you see a figure exactly to be minus 7.6 billion, it is good for Great Britain pound by 8 a.m. Thursday. But if you see a figure lower, like probably you get minus 7.8 or minus 7.75, which is lower than this, minus 7.75, which is lower than this, then it's going to be bad for Great Britain pound. Then this good trade balance has to do with every single country. Okay. Okay, so this one will have way more pressure on Great Britain pound than this. This one is exceptional. This one is filtered. This one will have more pressure on Great Britain pound. Okay, so over here is minus 19.31 billion pounds, and they're expecting to be minus 16.2 billion, which is good for Great Britain pound if this happens. Okay, so let's watch out for it. A figure higher than minus 16.2 is good, but a figure lower is bad. Then Thursdays, like you all know, every single Thursday in the Forex market from January to December, we have initial jobless claims for the dollar. Okay, and last week's own was negative for the dollar. This week's own, let's see what's going to play out. Initial jobless claims has to do with those who filed to the government, hey, I don't have jobs. The government will have to give them jobless claims benefits so that they don't start thinking of committing crime. They don't start thinking of taking drugs. They don't start thinking of negative acts, okay? That's why the government has program this system for the United States dollar. Okay, over here is 219k against 215k. If this is the figure, it is good for the dollar. Okay, because we want the initial jobless claims figure to be dropping. Think about it. 215,000 people say they don't have jobs in an economy. It's high now. Okay, so over here now we want a figure to be 214k, lower than what they expected. If that happens, dollar should be strong. If the increase happens, dollar should be weak. The same thing with the jobless claims 4-week average, continuous jobless claims. We just need a figure lower than this. Okay, but if you see a figure higher than it, dollar should be weak. If you see a figure lower than it, dollar should be strong. Okay, so this is PPI month over month for January. This has to do with the cost of production for companies. If you see a figure higher than 0.3, it is good for the dollar. If you see a figure lower than 0.3, it is bad for the dollar. To wrap up the week on Friday, we have Euro news early in the morning, 11 a.m. Employment change year over year. Okay, this is employment figure. If you see a figure higher than 1.1%, it is bad for the euro. But if you see a figure lower than 1.1%, it is good for the euro. Okay, then we have the GDP growth. This is Euro Central, where they have the European meetings. Okay, and this is GDP, has to do with growth. Okay, over here it is 0.4% quarter over quarter. Last 4 months against this present 4 months. Okay, they're saying it was what 0.4%. Well, right now it might reduce to 0%, which they diminished instead of growing. They diminished in value. If this happens, euro should be weak. If the opposite happens, if we see like 0.5 or 0.6, euro should be strong. Okay, this same employment change has been explained there. This has to do with the year over year, and this has to do with the quarter over quarter. Then to wrap up the week on New York session, we have retail sales. Okay, for the dollar, retail sales year over year, retail sales S gas, retail sales X autos, retail sales month over month, retail sales control group month over month. And you guys all know what retail sales means. It has to do with the retail stores. Are they making sales? If they are making sales, the businesses are making profit. If the business is making profit, the business will sustain, pay salaries to workers, and the economy will be working fine. But if they are not making sales, the business will not sustain, they will not be able to pay salaries, and then the economy will be bad. So we want the retail sales to be high. Simple. Okay. So if we see a figure higher than 0 points, oh my God. If we see a figure higher than 0.2 over here, it is good for the dollar. A lower is bad. If you see a figure higher than 3.7, it is good for the dollar. A lower is bad. The same implies for this remaining three. Okay. So that's how we analyze the fundamental analysis, and then we come to the charts, knowing fully well what we expect the news to do, and then we'll be able to use that to trade the financial market. So I want to tell you guys, thank you so much for watching to this point. I really appreciate your time and your efforts to get this knowledge that will help you to get responsibility and control trading the financial market for the time period of 10th of February to the 14th of February. So stay safe out there. Don't forget, analyze the market, apply proper risk management, and practice proper psychology when you're in a trade to control your emotions. These are the three areas you need to overcome to become a profitable and successful trader. Have a profitable trading week. Peace.